I'm hearing a lot of macro analysis, macro this, macro that. Unfortunately, we'll do this with Claudia Sahm in a minute. Love her to death. Keith, how do you identify a second leg of a bull market?
Well, what you want to see is so we've had the big move up. We're still in an uptrend. We're consolidating these gains, not seeing a lot of distribution. What you want to see is urgency in buying out of this range, right? So you want to see the breadth of this market start to expand. You want to see the percent of stocks above the 50-day moving average get to 80%, 90%, just showing a real demand coming in and urgency to buy stocks. And then you want the sector leadership to really start moving more cyclical and be more broad-based. That's what we'd be waiting for to get more bullish on the upside. Conversely, if you start seeing the defensives start to tick up and credit spreads start to widen, that would be a signal more negative at this point. But again, we're neutral, strongly neutral, Tom and Lisa, against stocks, bonds, and cash right now. And some people want you to always have a strong call, but today we're just giving us we're taking what the market's giving us, and we think that's the right place.
So what does strongly neutral mean? That's such a fantastic way to describe the sort of ambiguousness of this moment.
Well, as a strategist, everyone wants to say, hey, this is the time to buy or this is the time to sell. And sometimes when you say you're neutral, they think that you don't have an opinion. And we do have an opinion. We're strongly neutral, saying we should be more aligned with, where your long-term asset allocation, of course, stocks, bonds, and cash, sticking higher quality, and not taking those big bets across asset classes. But I will say, where we've been taking bigger bets is we've been overweight the U.S. all year. We've been most negative on emerging markets. That spread is wide, and we're staying up in quality and in fixed income. And we don't think you're being compensated today for the risk that you're seeing in the high yield market or the investment grade market.